Hi guys, welcome to Tuesdays Live, my favorite day of the week. And of course, I'm going to go back to a question that was asked last Tuesday on the live from Coffee and Chaos, who asked, Lynette, talk me down from the cryptos. Well, I don't know. What a difference a week makes. What do you think? You still need to have conversation? Because there's definitely a reason why they depict them as gold, because that's the way they want you to think. But hey, this is not this. It is a risk asset used in one place. And so when that demand wanes or something happens to trigger something, where are the other buyers? I'm not saying you should or shouldn't buy this dip. I just want to talk about what's happening. Because, can we have the slides? Oh, yes, I will bring my mic closer. I just don't want to blow anybody's ears out. But what happened last week? Well, there is the trade wars going on between the U.S. and China. And I think both of them are pretty strong, and it doesn't look like anybody's going to be backing down. So when President Trump announced the 100% China tariff, well, the markets went into meltdown because there's already a lot of chaos going on. But what I really wanted to point out here is Trump announces additional 100% China tariff, tech controls. We think, or we've been led to believe, that this is outside of the system. Do you still think that's true? Because it's not outside of the system at all. And that's really what I think triggered the meltdown. Not so much the tariffs as the controls. Government can control the internet. We've seen it over and over and over again. And so what was driving the prices up, I mean, tell me, why was Bitcoin worth $125,000 a coin, or wherever it peaked out, somewhere over $126,000? What is its functionality? What is its use case for you? I could see what its functionality and use case is for those that are in power. And so where we were at greed, and that was pushing that price up, when that greed very rapidly turned into fear, I think it went down. Let's see, I can hardly see it. Yesterday's greed, so last week's greed was at 71. And then now the fear is down at 27. That's a huge drop. What does that mean? One place, and of course we've seen a correction, the significant correction that is actually happening in these markets. And this is from Peter Schiff. As bad as Bitcoin looks, Ethereum looks even worse. And basically what he's telling you is to get out now. Now, do I think that this is completely the end of cryptos? No, I do not, because it should be very apparent to everybody that Wall Street, as well as the banks, the banking sector, etc., they're adopting it, period, whether you like it or whether you don't like it. So I think the test is on. We're going to see who is surviving this. We may have entered another crypto winter, or this could be the test. Let's just have a little patience and see, because you always want to make decisions with a level head. That's why it's so important to be prepared, right? Food, water, energy, security, barterability, which for me is primarily silver, but in any form, as well as anything physical, as well as any talent that you possess, all of that is barterable. Great time to be learning some new skills. But wealth preservation, so that if you bought Bitcoin at $125,000 or $126,000 a coin, let's protect that investment, right? Let's protect it in a properly diversified portfolio. Talk you down from cryptos? Let's just see where it's going to wash out and finish up, because these quotes are so true. And this is about what's happening in these markets. In crypto, margin calls don't work the same way as in traditional markets. So when collateral falters Algorithms simply sell. Boom. Let's take any human thought process or thought ability out of the system. I'm being facetious right now. I mean, that's what they've been training us away from. But I don't know, how's that working at the moment? Also, as a result, the plumbing that keeps markets open 24 hours a day also ensures that volatility can cause losses to cascade at a rapid clip because it's out of everybody's hands. It's simply a trigger on that smart contract. I bring this up not because the crypto market is falling apart at the moment, but because the layers of smart contracts that remove that human connection and the distance between human to human. I mean, some of you that are my age, I know you remember when most of the businesses were owned by mom and pops. And so if you were unhappy with something, you went and you talked to the decision maker. How easy is that to do these days? It's virtually impossible. Now, there are ways around it, and if you need to, we can certainly discuss those. But quite honestly, they want you and I as removed as possible from any choices. I'm telling you, are you really willing to let the computers and the algorithms and these smart contracts dictate everything that you do? Physical gold, physical silver, very, very human. You hold it, you own it, you control it. Would I digitize it? Not if there's a choice. No, I would not digitize my gold or my silver or my collectible gold. I will never do that because as soon as you do, you have given up real ownership and control. And they can chip away at it and chip away at it and chip away at it until one day that smart contract algorithm tells you, guess what? You don't really own your house anymore. You don't own your car anymore. Of course, you probably didn't to begin with because you did it on credit, right? You have to decide. This is a choice that we're all going to have to make going into this new system. I'd like to be as independent and self-sufficient as possible so that when these algorithms tell you to do something, you can just ignore them. I don't want a computer telling me exactly what to do. And they can scan every single thing that you say and they don't like it and it's programmed to cut you out of the system. We have a choice to make. Coming together in global community to demand sound money back in the system and having some sound money, having that foundation, as well as a local community around you to create surety in all of those things that you need to lead a reasonable standard of living, because everybody's going to be impacted by this. And look, honestly, cryptos are here to stay. The markets have spoken, even though we're in a major correction right now. And let's take a look at that chart, because I pulled this morning on Bitcoin, and I didn't have time to draw on it, but this is BTC. So that just came out about, I think about 13 months ago, and it shows you what's happening in there. But I don't know. I think I have a laser pointer on this, don't I? Yes, I do. But it doesn't go through. I don't know. Does it go through there? No, it doesn't go through. But that's okay. This is the chart on Bitcoin, and you can see how much it has dropped and continues to drop today. But we'll see what happens with this. I wanted to discuss this with you because Lynette, talk me down from the cryptos, coffee and chaos. That was a great question last week. Right now, I'm thinking that you see maybe the problem, because when this stuff is held in a few deep pocket hands and they go risk off, who's there to buy it? You want to have an asset that has the broadest base of buyer, particularly as we go through this currency reset. And that's really what physical gold and physical silver do. Because when one system dies, another one is born. But gold and silver is the bridge to protect what you've managed to accumulate and hold your purchasing power intact so that you actually have principal to work with on the other side of this mess. And oh, by the way, how about having the ability to take advantage of the opportunities that present as we shift from one system into another? And oh, by the way, that's why I say this is the best opportunity that I've personally ever seen in my lifetime to get sound money back in the system again as redeemable gold that governments cannot inflate away. And what are they talking about? The debasement trade? I mean, every day now I'm hearing the debasement trade, the debasement trade, the debasement trade. Do you know what they're really talking about? They're talking about the final destruction of this stuff. That's what that debasement trade is. What protects you from it? This and local community. So we have this opportunity. Please, let's take advantage of it. And now I'll go into questions. And this is from a client of Sari. And Robert asks, I have a reversed fixed rate mortgage. I can borrow against it to buy graded coins. Your thoughts? I am thinking of around $50,000. Well, honest to goodness, a reverse mortgage, so my normal assumption when I see that would be that you do not have heirs that you want to pass that real estate asset down to. But yeah, you've already put yourself in the position, so you might as well take advantage of it. You do whatever you're comfortable doing, but I would have no hesitancy to borrow against that. Would I go and take a reverse mortgage out in order to do this? I'd have to look at the rest of your circumstances, but it certainly makes sense if you already have that reverse mortgage in place to take advantage of this opportunity. Absolutely. And D Princess asks, do you think a world will exist where NATO has a currency separate from BRICS? I can't see every country supporting stablecoins. China just announced their own. Well, they're going to do a stable coin because it's a way to create demand for their currency. But the stable coins go the way of the currency that backs it. So, we've got dollar stable coins. Well, that means that it's backed by dollars, and as the dollars go away, it gives you nothing. So I don't think that you'll see these two separate entities, NATO and BRICS. I think what is more likely, and it's already in place, is the IMF's universal currency that is made up of SDRs, and the SDR just stands for special drawing rights, and it's just a name like any other name, but that is a universal currency because it consists of a basket of currencies, and they can put every single currency in that basket so that overall you're working with a universal currency, but it can easily translate into local currencies. The advantage of that for cross-border enterprise and cross-border payments, it makes it very, very easy. But the real advantage for governments and if central banks continue to exist is that you on the ground, me, you, wherever you are, the individual is going to think that it's still a dollar, that nothing has changed, when in reality, everything has changed. And that's what they like. They like you to think that nothing has changed. So I think not two big currencies, though I will say that China, Russia, and India have been accumulating more gold than any other country. So will they back their currency with gold? That would be the historic norm. But they can't do it until they hyperinflate all of this debt away. Because remember that it's still debt that justifies creating this currency, but with the advent of stable coins is now purchases that is then translated into that debt to create this garbage money. And the easier and faster it is to create the money, the more money gets created and the less value that all that money out there actually has. Ernie Ferguson asks, Lynette, what do you think about the banks over leverage with silver shorts? We just did a piece on that. And yeah, Bank of America. Okay, first of all, let's define what a short position is so everybody's on the same page. Shorting is selling something that you do not have, and the expectation or the goal is to go into the market later and buy it back cheaper, so that the difference between what they sold it for and what they have to pay for it, that's their profit. But with silver now spiking, I don't know where their technicians were. Maybe they should be listening to me, because we've been talking for a while about gold concluding that double cup and how powerful that truly is. And the fact that silver actually gets used up in manufacturing, so it is actually a diminishing asset. And let us not forget how much physical silver was shipped over from Europe. So yeah, exactly. I think that there is an explosion that's happening, and in the derivative market, because that's what they sold. They sold derivatives, which are just big fat bets that you can never convert into the underlying. And I think that we are seeing what that looks like right now. Is it going to be enough to take down Bank of America or Wells Fargo that's just been approved to expand their presence? I don't know. And I don't know if we're ever really going to know, because that derivative market is so opaque. We can't see what's happening in there, and those that create that market can dictate whether or not there was a default. But I think it's huge, and I think the fallout from the short silver positions and what's happening in the silver markets has yet to be fully revealed. But we're definitely paying attention to this very, very closely. And I would also suggest that what this is a little taste of what's going to happen with the Bank of England in the gold short department. But with silver, remember, silver gets used up in manufacturing, which is why it is the secondary currency metal. And, I think metals on both sides, the monetary metals, both gold and silver, well, they're shining. And that should be revealing that they are the flight to safety trade, but only if you really hold it in your possession. Because the reality is if you don't hold it, you don't own it. You've got a contract, and any contract is only as good as the other entity on the other side of that contract. And as we've seen over and over and over again, the big banks, Wells Fargo, Bank of America, JP Morgan Chase, etc., they're deemed too big to fail. You and me, we're just about the right size, but not if we come together. Then we are bigger than that, and we can make some demands. So, and I would have silver back in the monetary system again. It's a secondary monetary metal. And Jared H says, can you just, and oh, by the way, too, just to finish that up, I did 2 pieces on updating where we are in the silver position as well as the gold position. They'll be coming out over the next couple of days or so. So just kind of, we can get into that a little bit more in those videos. And Jared H asks, can you discuss the Fed now? Haven't heard anything on it. And is there a relationship between that and stable coins? Conspiracy theorists are saying we will get all our taxes and property taxes back on it. Well, I don't know what's going to happen with it, but I did go in to see what was going on with the Fed now. And actually, you haven't heard much about it because that market is being pretty quiet. While we are seeing a level of adoption, we are not seeing a level of adoption, I think, that was anticipated. Having said that, you need to understand that everybody does have a FedNow account. And I think that is whether you're getting your taxes and property taxes back on it, or whether they're just giving you some stimulus in new stable coins or whatever, however they're going to use it. That market has been super quiet, and there's just not a whole lot of news that's happening on it. But that was also true with the SDR. And so when the financial crisis happened in 2008, by 2009, they were just sitting there. The SDRs and that whole system that was created back in 1969 was just sitting there waiting. It's been revived, and I think you're going to see that with the FedNow accounts as well. But let's see. And Psalm 91 PV asks, should a war in Europe ensue, what effect do you feel that will have on the price of precious metals? Wow. I mean, the handwriting is on the wall. I am not saying that they are not technically overvalued, but fundamentally, they are not even marginally overvalued. And should a war ensue in Europe, just like what's going on between the U.S. and China, and okay, maybe the Middle East seems to be calming down a bit, and thank God the hostages were released, but there's still devastation over there. And Russia and Ukraine, it's not over yet. I mean, there are just a lot of things that are happening in terms of war, but that's one of the reasons why you see the central banks unable to suppress the price of precious metals, because the markets are bigger than central banks. They really are. And all of these derivative trades, who knows? They all admit, and by them I mean all of the big kahunas, like the World Bank and the Bank for International Settlements and the IMF and the Federal Reserve and the FDIC, and take your pick. Every single one of them says that they really have no idea of the value at risks. That's the VAR, value at risks of these derivatives that are leveraged, 1,000 to 1. So you've got one little piece of equity and 1,000 more pieces of debt on top of that. That, my friends, is a sinkhole that when that implodes, there's no amount of money printing that can cover that over. None. And it will implode. There's lots of things that we haven't even seen yet that they're imploding, like zero interest rates for 15 years with all the banks, including all the central banks, way underwater in their debt instruments, mortgages, bonds, car loans, student loans, etc., any form of debt. They are way underwater. We haven't seen that explosion yet, but I promise you, it's been happening. It's been happening since 2022 when they broke that trend cycle. Things are way more fragile. Can you see the fragility now? Because for a long time, people couldn't see that fragility. But it's there, and it should be very, very obvious right now. And Beyond the Matrix asks, hi, Lynette, how about stacking platinum? Well, I'm not wearing any platinum, maybe a little bit of platinum. So platinum is a very rare metal, and it is certainly a precious metal, and it is even more rare than gold. Having said that, it is not a monetary metal. It is an industrial metal, and Russia controls a lot of the platinum that gets mined. I think it's perfectly fine to own platinum. Just know that it is not a monetary metal. And my personal focus, since I've been studying currency life cycles, is that this is a currency issue. And that's why my primary focus is on physical gold and physical silver. But platinum's okay. I mean, I own some platinum. It's a great metal and it is very rare. And Victor Mack asks, I'm 21 and I own 5 figures in both gold and silver. You are in a fabulous position, Victor. And I'm wondering what strategy I would be approaching with no liabilities. Well, Victor, give us a call at 833-GLDZANG. And let's put what your holdings are out on a strategy to see what you've made, and you're going to talk about your goals. So that's what I would highly recommend, is that you get with us and you establish what you're trying to accomplish. Let's look at where you already are, and then you can make some educated choices that puts your best interest first. But I applaud you. I absolutely applaud you for, especially at your age, this is so critically important. And I'm hoping that you have other friends that are doing the same thing. And, I'll tell you, I just got back from Malaysia and Cambodia, and what an amazing experience. But one of the gifts that I brought for my grandson back, because he loves his gold and he loves his silver, is a Cambodian coin. And in fact, I've got more of them, but I had my daughter FaceTime me when she gave him the gifts that I brought her back, and his face lit up like a Christmas tree when he saw that coin. So, and I have a tendency to do that. In fact, we all did. When we were all traveling, we all bought more gold and silver while we were there. Keep stacking. Great job. And get involved in the movement, because it's not really old people like me that are going to push that forward. It's people like you. And that's who we're doing this for. We've got to get sound money back in the system again and give you your power back, because that's what levels the playing field. This is not democracy in action, what we've got going on here. At best, it's crony capitalism. That's at best. At worst, it's fascism, because that's where corporations and government meet. So, yeah, I applaud you for that. Join the sound money movement. Let's get involved with that, and maybe you can get your friends to get involved with that too, because that's where my hope lies. And you've just given me a ton more hope, and I thank you very much for that. And Chris Willis asks, Lynette, can you educate the masses on the recent shutdown of millions of bank accounts because they did not sign up for digital ID? Yes, I can. And so would you make sure, Jessica or Josh, to put that in? And the answer is yes, I will. And because that's where they want to drive us to. That way they have all the control. Let's take that control away from them, and we can do it if we come together. There are way more of us than there are of them. There's 8.4 billion people on this planet. 3%, a very vocal 3%, can take back control. That's still way more of them than way more of us than there are of them. So, yeah. And George Shabor, and if I butcher anybody's name, please forgive me. You said Basel thing. No, actually, I said I did not think that Basel III would mean anything. It was years ago that Basel III and the end game could have potentially changed things. But in this environment where it is deregulation and risk on and a transition, they need a big crisis. So, and actually, as I was talking about Basel III all along, it took so long to put all of the regulations in place, and banks still couldn't comply with it. So I actually called it a nothing burger, and that's pretty much what it's been, a nothing burger. And Sherdar Safu says, the financial system is printing money, and what will happen to inflation and debt? What are your thoughts on gold and silver? Well, the financial system can only print this stuff, right? And every time they do, the value of what's out there goes down. And so when you see a surging spot market, because remember, that just reflects Wall Street's opinion on gold and silver, a trading market, a short-term trading market. That's all they have is to print more money to inflate the assets, the fiat money assets, so that people feel richer. And then if they feel richer, they're willing to take on more debt and spend more money, which then creates that righteous circle. But what's actually been happening and the surge that you're seeing in the spot markets is an indication that people around the world, quite honestly, are realizing that this stuff has no value. And actually, I should go to this stuff. It really doesn't have any value at all. And you see this monopoly money? You tell me, what's the difference between this $10 trillion Zimbabwe note and this $20 monopoly money? People at one point accepted this as money. But it's no better than this. Absolutely no better. So, yeah, if you don't hold it, you don't own it. This stuff is all fiat money. This is sound money that cannot be inflated away. Every portfolio, every single portfolio, no matter what else you choose to do, needs a foundation in sound money. That, my friends, is proper diversification. Am I properly diversified right now? Not really. I'm all in on physical gold and physical silver. Why? Because I know the truth. The real trend is not the markets, the stock markets going up or down or bouncing this way or that way. The real trend is the loss in value, because to your point, this is all they have. That's all they're ever going to have. And I don't know why it's okay with people. We need to take our power back so that they can't keep doing it to us. And Gail Brownell says, yeah, okay, I'm a customer. Thank you so much. My concern is when the time comes to sell my pre-33 gold coins back to you, what if U.S. mail isn't here anymore? Won't the insurance be an insane price? Well, I'm not sure that there's always going to be, like when something dies, whether it's a system or what have you. I mean, look at the different systems that we have, courier systems that we have in place. It's not just the U.S. mail. It is also FedEx, UPS, even Amazon for fulfillment, and more entities will come into the fray for that fulfillment. Will the insurance be an insane price? Well, maybe, but that's because there's no value in this stuff. However, what you're looking at, this will more than overwhelm any kind of insurance or any kind of price of shipment. In addition, since you're talking about the exit strategy, what we're setting up with a variety of wholesalers so that your exit will be timed. And we also have the ability to marry portfolios to maximize what you get on the way out. And then boom, you're going to convert it into the next income producing asset that is super dirt cheap. I have to tell you, I never really make choices solely based on prices. I want always to have some kind of strategy so that the choices that I make actually support my best interest. So, Gail, we are paying attention to all of this, and we 100% absolutely have an exit strategy to maximize your benefit And as things change, we will be on top of that because that is our job and that is our commitment. It's not just getting you into gold and silver. And by the way, anybody can say, oh, I have a strategy. You need to make sure they give you specifics because I know you got specifics from us, right? Absolutely. And we did that because I've been studying currency life cycles since 1987. And I know the typical patterns. And that's what the whole strategy is based on. What's happened all those times when the currencies went away? Okay, well, is this time different? Maybe, but I've got over 4,800 times where it wasn't different. So what is the next most likely outcome for us to get the same kind of behavior? And that's what the strategy is based on. So, Gail, just take a few deep breaths because we will remain on top of this. And if our exit strategy has to be tweaked because of shipping, then we will tweak it. But we will stay on top of it because that is a big commitment that we have for you. This isn't just here today, gone tomorrow. This is a very long-term relationship between us. And that's even after the end of this trend cycle. That's what we're working on. And thank you very much for being a customer. I appreciate that. This is how we support each other. And Kathy Rennick asks, would it be better to buy 10,000 in silver or a few gold coins? Kathy, it depends. Call us. Have that conversation, right? What is it that you are trying to accomplish? Because we're going to look at your goals. We're going to look at what your current cost of living is. We're going to look at what wealth you have to protect. And we're going to come up with a strategy that's similar to mine, but tweaked for you. And so it is more than likely some kind of combination of the two. But I couldn't never say that right off the top of my head because I don't know what your particular circumstances are. And these strategies are all customized and tweaked. So give us a call and then you decide. We're going to lay everything out because we are all about educated choices. And APE asks, once the reset occurs, will coin shops have enough of the newly converted fiat currency to buy back the gold? Thank you. I don't know if individual mom and pop shops will. That is the benefit of working with like Zang Enterprises because of the deep pocket wholesaler relationships that we've established and continue to establish. Frankly, we're working on all around the world because we are a global company. So these things take time, but rest assured, we are absolutely working on that. I can't say about a mom and pop shop because they'd have to be self-funded, and I don't know. I don't know about that. But Darlene Spears asks, can I trade post-1933 gold ounces for pre-33 gold ounces? Yes, you absolutely can. And again, I'll say give us a call, 833-GLD-ZANG, and discuss everything so that you can make educated choices. And guess what? I don't even care if you disagree with me. I will support whatever choices you make. I just prefer that they're educated. That's all. Just educate yourself. Then you do whatever you believe is in your best interest to do, and we will support you 100%. And Phil McCracken asks, pre-33 and jewelry is a different category. So pre-33 and constitutional along with jewelry, well, you see me wearing a lot of jewelry, don't you? And that's one of the reasons why I do. And you need to understand gold and silver in any form is monetary at its base. So, yep, why not? Why not? And Deb asks, if we own gold but not in a 401k, how can the government confiscate our gold? Well, what they're going to want to do is they're going to want you to volunteer, just like they want you to volunteer everything else, so that you think that it's your choice. And the way that they've done that historically, and what I anticipate, is by giving you a huge premium to turn in your gold. Now, if you don't have it in a 401k or say like an IRA, in an IRA, it's easy to do a big sweep, just like a 401k would be easy to do a big sweep. But if you're holding it in your possession, then they can't do that, right? Because it's invisible to them. So what they would rather do is get you to volunteer turning it in. And the way that, this is how I think it's going to look. Let's just say that spot gold happens to be at $6,000 when they decide to do an overt confiscation. And what they're going to do so that they don't get pushback is they'll say, okay, well, it's your patriotic duty. We need the gold because we've got to combat whatever it is that they've got to combat. And so we're going to pay you $8,000 for an ounce of gold when spot is at $6,000. Well, most people, I don't know why they still do, but most people believe that Wall Street is telling them how much gold is really worth. They'd go, well, wow, it's only worth $6,000, but they're willing to pay me $8,000. Okay. Just like there are jewelry shops and pawn shops and everybody that is starting to cash in their gold, although that's changing now as well. Because people get blinded by numbers. Don't be blinded by numbers, right? So if it's outside of the system, they'll try and entice you. If you have the kind of gold that's in a different category to monetary gold, then that is not likely to be confiscated. And I say that because one of these coins could easily be worth at that point. I mean, right now, I think the most expensive coin, and I could be wrong about this, is something like somewhere over $18 million for 1 ounce of gold. They ain't turning it in for $7,000. So that's the category that I want to be in, because anybody that can spend $18 million on 1 ounce of gold is likely to either write the laws or have the ability to influence those that write the laws. So that's the category that I personally prefer to be in. And remember, I have my Uncle Al that was sitting on at least 3,000 ounces of pre-33 gold coins when it was illegal to hold more than 5 ounces any other way. So that greatly, greatly influenced me. And we will see. I mean, I'm glad that I had all of those experiences. And you know, it's kind of nice. Like I was talking to Mimi earlier, and she's one of our editors. And she said to me that she was editing or looking at some old work and editing some new work. And she saw how what I said before is actually happening now. Well, you know, people have been telling me for years, Lynette, you've been telling this. These things don't happen quickly, because if they happen quickly, well, guess what? Aren't you noticing now with what's happening in the markets? Because it's happening quickly. It's the frog in the pot of water. You know, they want you to think that it's your idea. They want you to not realize that things are changing as they're changing them. And that's because they want to stay in power. I say, let's take our power back. We can do that. We have to do that. We have to do that. And Deb asks if we own gold, but, okay, we did that. So, and Nights, I'm sorry, please forgive me, asks, Nisha? Okay, Nisha, thank you. Is the system able to completely ban the trade of precious metals? If we're in a full surveillance system, then maybe, but probably not. And the reason why I say that is because gold and silver are critical to every single sector of the global economy. That's far too much demand to ban. And even when they did that back in 33, you still had those other sectors of the market. They were just more, there was a lot more oversight, right? A lot more reporting. And that was in the monetary metals or the basic metals. So, and the basic metals, I mean in gold and silver, like for dental work, for jewelry, etc. So they were still allowed, and you could certainly still buy jewelry, a piece that, well, I mean, this is Victorian, right? So, okay, it wasn't exactly confiscated back in that period of time, because that's the mid 1800s and on. But you'll see me wear things that were in like the 30s or 40s. I'll point it out if you want to. And so there are areas where gold and silver are used in every single sector of the global economy. No, I don't think that they can completely ban the trade of precious metals. This is why they didn't do it from 33. That's why I only do the pre-33, or, obviously jewelry as well. So, I mean, they can do anything if we allow it, but why in the world? We need to stop allowing it. We need to stop enabling it. Redeemable gold in the system. That would do it. That would do it. And D. Princess asks, in the first confiscation, there was a large fee or jail time if citizens didn't bring in their gold. The coin shops weren't buying bullion either, so you wouldn't be able to sell it. Right? You had to turn it in, or and I'm not saying there's not going to be a black market. There's always a black market, but you're still not going to express to its fundamental value. This, even if it lost all of its collectible value, that's the importance of understanding the true fundamental value. How much is this really worth if it were not a collectible? If it was just like this, just 1 ounce of raw gold. This is a 1889 coin, but that's still worth like 40 grand or so, fundamentally. Not on the market yet, but we will see that and more and more. That just happens to be where it happens to be at this moment. But the more of this that they do, the higher that number goes. That's why I'm saying don't get blinded by numbers, because by the time we hit those numbers, what that's really telling you is that people understand that this is just trash, that it has absolutely no value at all. And why? Because it costs nothing to create. There's no skin in the game. They get to charge you a lot more for it, and that's their income. The difference between the cost to create and what they sell it to you for, $10, $50, $100. That's why the Federal Reserve on the purchasing power chart, big fat zero, zero. That's its true fundamental value. And 10 trillion times zero is still zero. And Chris Willis asks, what do you say to pensioners who have large sums in term deposits because they rely on the income? My mom won't listen when I tell her the risks. Chris, that is a really good one. And, your mom has lived through it. So she's kind of denying her own experience. However, having said that, in the strategy, we account for that reliance and dependence on that income and would help build a ladder to supplement that income. Because here's the problem, Chris. If you lose all your principal, you have nothing to recoup later. You have nothing to work with to recoup that loss. In the Zang enterprise strategy, and I don't know how open she is to anything. She might be more open now, but you can do a Zoom where we can have a conversation and maybe see what questions or what pushback she has, and then help her overcome that. Because what is she doing? She's risking her principal for a little bit of interest. So what happens if she loses all of her principal? She ain't getting any more of that interest either, and she won't be in a position to gather that. But the strategy for her, for those that are retired and living off of investments they've made in the past or the interest from those investments, that's part of the strategy. So that's what I mean. It's tweaked for everybody. Show her the purchasing power chart. Put her birthday chart. Let her see that this is official. It's not your opinion. This is from the central bank, from the Federal Reserve. And then take her on to the xe.com, the website, because I'm thinking maybe, Chris, you're somewhere in the UK, and let her see the different valuation between the dollar and the pound, spot silver in the pound, spot gold in the pound, so that she can see how gold and silver, even in the manipulated markets, have preserved her purchasing power. But part of the strategy is, if you're depending upon that income, you need to have that income. So you're going to use that income up, but we're going to recoup it, because the strategy is set in full circle. So whatever taxes, whatever fees, whatever principal gets used up, you're made whole. You're made whole. You're made whole. So call us. Let's see if we can help you. And low blood pressure asks, Lynette, when dollar goes to zero, don't stocks go to zero? But they don't at first, right? Because if anything that is valued only in terms of dollars takes more and more dollars to buy the same thing. So you see the stock market going up and you go, woohoo, isn't that good? But understand, you even see the spot gold and silver markets going up. Are you ready to convert your gold into those dollars that you know are losing value and have no purchasing power left to them? So yeah, you're absolutely right. If you cannot buy anything with those dollars, all those zeros behind any number at all mean absolutely nothing. So people make a big deal about $40,000 an ounce of gold. How about $40 trillion for an ounce of gold? Do you really want those trillions of dollars at that point? Only if you're going to take those dollars and boom, convert it into an income producing asset. But you ain't going to want to sit in them, because at that point, you know what's happening. So really good point. Thank you so much, low blood pressure. And Tim Marzullo says, hi, Lynette, welcome home. Thank you so much. When, say, reset happens, and let's say they take off 2 zeros and our mortgage is, say, $400,000, does 2 zeros get removed from all my debt as well? No, that is not what happens. So part of the strategy is to repay that debt with dollars that have zero value. And if history repeats itself, then we'll have about a 9-month window to do it. And by the way, one of the questions was, does silver stay up there that same period of time? And the answer is yes, it does. So really, no, zeros do not get lopped off your debt. What they want to do is reset that debt into contracts that are more onerous than the one that you're exiting. So it makes a whole lot more sense to put into position the gold to pay that mortgage off. If your mortgage is $400,000, that means 10 ounces or the equivalent. By the time it is time to pay that mortgage off, what might have taken 10 ounces before might take a quarter of an ounce to pay off, right? So that is part of the strategy, and we can walk you through how to do that and set it up, and that's a much better plan. Now, variable rate debt is kind of different. Fixed rate debt, it's great. That's the whole strategy that the government used. Just repay that debt with dollars that have less and less and ultimately zero value. But variable rate debt, the interest on that debt explodes. And so you're never getting out of that debt. So you want to make sure that if at all possible, get rid of variable rate debt. And I would do it much sooner than later. And Jared H. asks, will there be a silver confiscation? Well, I mean, silver was confiscated back in 33, but I don't think that that's likely. And the reason is because silver gets used up in manufacturing. And it is as much an industrial metal as a monetary metal, maybe even a little bit more. So if they did do a confiscation, it would create even more ripple effects and problems. So anything is possible. They can do anything they want. But remember, silver in any form is monetary at its base. So have a variety. I love constitutional silver. You guys know that. But I have it in a whole bunch of different forms. So we'll just have to see. But I'm not as concerned about that as I am about gold, because gold is the primary currency metal. And Persnickety asks, what are reasonable fees to pay when cashing in bullion, and what is the process? Frankly, there's not a very big spread in gold bullion, and it depends on what you're doing. If you're just selling it outright, then you're going to be probably 1% or something like that, maybe even 0.5%. If you are converting it into the collectibles, then you aren't going to pay anything. You're going to get 100% of whatever the wholesaler is going to bid, because at Zang Enterprises, we do not double dip. So in other words, we aren't going to take commissions from a liquidation to convert into a collectible. We're just not going to do that, period, end of discussion. So it kind of depends. And it also depends on the quantity. You know, if you're doing quantity, then that could be even lower, but it kind of depends on whether or not you're selling it outright or you're converting it, at least with us. That may not be true for other places, but at least with us. And the process is we'd give you an indication bid, right? Because it's going to go whenever we receive it. That's when it gets locked in. So before you ship, we give you an indication bid. This is what if we had it in our possession right this second, this is what we could pay you for it. However, so then you would ship it in, and it just then the prices get locked in once we have it. And then the rest of it can happen. And but if you want to get more specific, because obviously I'm busy doing this, I'm not doing that, you should give us a call and let them be very specific. You know, talk to your strategy specialist. They can give you examples. They can answer any questions, get you to the right people. And if they have a question for me, they can pull me in too. They know where I am. And Jennifer Sullivan asks, should we buy a metal measuring machine, i.e., to know if the coin is a fake or not? If so, which brand is more reliable? Well, we did a video, and maybe we can put a link in there of all of the different ways that you can test to see if it's real or not. A real simple one, just as an overview, is that gold and silver are non-magnetic. So get a really strong magnet, and then you can test each one of the metals, and that would be like the first thing. If they're non-magnetic, then chances are, or could be quite good, that they are real, because I have a couple fakes in this drawer of both gold and silver, and you know, they do a pretty darn good job, and I don't have a magnet in this drawer, so I can't really do it. But there's ping tests, there's weight tests, there's all sorts of tests, and we'll just put that link for you in a video that we did a long time ago, so you can see all of the different tools that we use. But we also do really rely quite heavily on our wholesalers because they can put it through even more strenuous tests. And then it's certified to be what we say it is. So you need to make sure that you're buying from a reputable dealer so that you feel comfortable and that it's true. I mean, this is all the certification. This is what we say that it is. But if you find things out and about, keep a strong magnet in your pocket or in your purse. And because I've found a lot of stuff at yard sales, at estate sales, at secondhand shops, etc. People don't necessarily know what they have. So keep a magnet, and if it's marked as well. Like if you're doing something like this, I mean, I don't know that we can show this, but right here on it, it's stamped and marked, and it says sterling silver. And so when it's marked like that, you know that it's 92.5% pure. So there are lots of ways, and we'll help you. And Eva Sintra asks, hi, Lynette. My boyfriend has been super excited about gold and silver since we found out about true money versus fiat currency. What can he do to pursue this, for example, as a career? Thank you. Well, kind of depends. I don't know where you are. I don't know what the background or experience is. I know that at Zang Enterprises, there is rather a rigorous and ongoing training. So you can find maybe a Zang Enterprise to participate with, or, just kind of put it out there. Put it out there. In my lifetime, before I even ever did this, because of course I had my Uncle Al, but back then there were not a whole lot of gold dealers. And I remember that when I was a stockbroker, a couple of times in my career, I came across people in the gold business. And I always remembered there was like a little, I don't know how to explain it other than it was like a little catch in my heart. I never did anything about it at that time because, frankly, it wasn't really time for me to do anything about it. But when it was time for me to do something about it, then I dug in to find where I was going to do it and with whom I was going to do it. I would say you want to look for very highly ethical people. Like at Zang Enterprises, I can tell you that with all my heart that whoever it is that we bring in, so all, not just the strategy specialists, but all of the assistants, everybody, really, the whole team is all committed to making a positive difference in this world. I've never been in a company where I've had such high quality people that really are here to make a difference. So I applaud you for that. You need to find a company that believes and that has the same kind of beliefs and moral integrity that you do, because everybody at Zang Enterprises has that, and we've tested it, and we know. Can't say that's true for every other place, but I can 100% say that it's true at Zang Enterprises. And Nate asks, there's only one digital asset to invest in, and that is Metalicious. Metalicious. I've not heard of them, but I will look at that. So yeah, if you give it to me. They're partnered with credit unions and are the only digital assets company out there that is currently compliant with all government regulations. And I am not really sure. Yeah, let's pull that up and take a look. But that doesn't sound like it's a convertible gold back digital asset. How Bank, Social, and Metalicious are banking on blockchain. Yeah, no. Look, here's the reality. When one system dies, another one is born. But right now, we are in the wild west of digital assets. And these these companies that create all this stuff have been given safe harbor, which means that they can do anything they want because you and I are the guinea pigs. I say, let things burn out. Let's see what's going to happen. Yeah, are the digital assets here to stay? Sure, but they've got to go through the test of fire, just like gold and silver have for 5,000 years. These digital assets are new. They are in experimental stage. It's the Wild West. So Nate, you rock and roll with whatever you're comfortable with, because that's what everybody needs to do, whatever it is that they're comfortable with. But I'm very happy to sit on the sidelines with physical gold and physical silver to see who is actually going to survive and how cheaply I will be able to buy it then, because the patterns are always the same. So, yeah, I'm not comfortable with any pure, intangible, digital. It's hard for me to call them a digital asset. They are developing a new market. Let's see what happens. So I respectfully disagree with that. Yep, complying with all government regulations. That's what I want. Yeah. I want those smart contracts to dictate everything. I want somebody that has the ability to go in there like the central bank and push negative interest rates, and I have no way to get out of them unless I go ahead and I buy something with them. I want something that has no trail, is decentralized, I know has no counterparty risk. Does that run no counterparty risk? That would be inaccurate. And if that's your opinion, then it's not an educated one. Make it educated. Whatever you choose, make it an educated decision, not just because that's what you want. And Nolan Martino says, LMAO, learn the difference between Bitcoin and crypto. I'm so glad you're LMAOing your, and I'm glad that I can entertain you, because that's part of it. But crypto is getting obliterated, but Bitcoin is doing just fine. Really? Can you put that chart back up? The last chart that I had on there, because that's BTC. Yeah, that one. Yeah. I don't know. It hit an all-time high of 126,000, and the last time I checked this morning, it was about 111,000. You know, now, is it overvalued? Sure. What is the valuation? How much is a Bitcoin worth? I can tell you how much gold and silver are worth. I can't tell you how much a Bitcoin is worth. So you can chuckle, and, you know, maybe you're right. But I've been in these markets on some level for, well, I'm going to be 71 tomorrow. So for the last 61 years, I've lived through a lot of markets. I've lived through currency transitions. I was there on Black Monday as a new stockbroker in 1987. I know what a market route looks like, tastes like, smells like, feels like. We'll find out. Millie Mae, Lynette, you scammer. How come you don't make videos when Bitcoin is pumping? I sure do. So, I don't know, Millie Mae. How many videos have you watched? Because I started talking about digital currencies in 2015. That was the first one that I did. I started talking about digitization then. And guess what? In 2009, when I was sitting there going, okay, what's going to be the next system? What's going to be the next system? And somebody from China, I could probably go back and find that article, said, what about the SDR? So, you know, look, I've been following these markets on some level pretty much my entire life, including the digital markets. And I've been watching Bitcoin since it came shortly after it came out, when it was $7 a coin. And there was not one doubt in my mind that, number one, it was not an accident that Bitcoin came out in January of 2009 and quantitative easing, this free money, came out in March of 2009. So I started talking about it then. So I'm just thinking you probably haven't been looking at much of my work. But you need to understand that I always did believe that to be a Trojan horse, to get enough adoption so that when they made the transition into a full digital surveillance economy, people didn't think anything had changed, when in reality, everything had changed. So am I a proponent of it? No, I'm not, because I'm not a proponent of a full surveillance economy. So, yeah, I think you're inaccurate, Millie Mae. And Parsley G asks, Lynette, can you explain how the Fed buys treasuries? I thought the issuance of treasuries is basically how they make money. So where did they get the money to buy this money? It's called seigniorage, and maybe we can put a link to that video that we did a while ago on that. When the Fed creates money, the Federal Reserve creates money, they get to keep the difference between the cost of money creation and how much they sell it for. And that's their pure profit. Whatever they have over that, they typically send to the Treasury. But we're now in the 4th year in a row where, I mean, it kind of seems a little strange to me, since they can create, you know, this $100 bill or $10 trillion bill or whatever it's going to be. They can create it for virtually nothing. If they have to print it, it costs them I think, don't hold me to this, but it'll be in the seigniorage video. I believe on a $100 bill, it costs them 9.4 cents to print a $100 bill, probably because it has that tracking mechanism in there, and I don't have it easily. So it's not that important. But if it's digital, a digital $100 bill, I mean, you and I have to work a whole lot harder for $100 than we do for one. Yeah, okay, I don't know where it is. But that's how the Federal Reserve makes its money, by issuing money. So it's the government who issues the treasuries, and then the Federal Reserve creates the money to buy those treasuries. And that is their profit and what they use to run their business. And then at the end of the year, anything that they have left over goes to the Treasury. But for the last 4 years, I think we're in the 5th year now. I don't remember, but you'll go and you'll watch that video and you'll see it's either 4 or 5 years that they have not been able to, even though they have almost 100% profit of all the money that they've created, they're still underwater. How is that possible? But it is very telling, because I would say that's true for all central banks. They're all zombies. Governments are zombie governments. The central banks are all zombie central banks. They're all underwater so deeply. The corporations, who was I talking to the other day? I think they were interviewing me, and they said something about zombies, the zombie apocalypse. And, you know, it's funny. No, they're not these dead people that are walking, you know, around looking scary or what have you. But let me tell you, we are surrounded by zombies. That's why, what's that, silver bullet is for a werewolf, but the silver bullets of gold and silver will protect you from all those zombie governments, those zombie central banks, and those zombie companies. This stuff won't. And for those that believe so much in this, can you tell me why they aren't purple or pink or chartreuse? Why they try and depict them as gold so that you actually think that they're this? Can you see the similarity between the two? Because subconsciously we know that gold is money, even though we've been trained away from it. This stuff hasn't run the test yet. Let's see what happens. And Kelly McGee says, will gold and silver be subject to an excise tax after a revaluation? Probably not, especially when gold is back in the system again. And remember, we've got a statewide movement to legalize gold and silver as legal tender. So the states are doing their job to protect you and me. So we'll have to find out. And, you know, the taxes on that stuff is pretty high right now because they want you to not touch it. They'd much rather you be in their fiat money products that they can tax away the value of without you realizing it through inflation. So I don't know. But not typically. So I would not think historically that would be the case today either. And Barbara Burns asks, Mrs. Lynette, you never said who your daughter sold her gold to from my question from last week. Okay, so what she sold was, and I don't know that it's appropriate for me to get exactly specific, but there was a jewelry store that she did a lot of business with and so bought a lot of this stuff from. And so that's who she sold the gold back to, was to a jewelry store, because it was in jewelry form. It wasn't in coin form at all. So that's who she sold it back to. And that was many years ago. That was, I want to say, that was probably in 2016 or early 17 when that happened for her. Also, why does coins and little bars have a bigger market than gold jewelry? Well, I don't think they really do. Or does jewelry have a bigger market? Boy, I'd have to, you know what? I'd have to look at that. So pull that, and I'll pull a chart on that for next week. But either way, keeping in mind that gold and silver in any form is monetary at its base, there is a huge market, because you can go into a jewelry store and sell the coins. You can go to a gold dealer, and if they're set up properly, you can sell the jewelry. But you're probably going to get a little bit more for the jewelry at a jewelry store, and you're definitely going to get a lot more for the coins at a dealer. So it just kind of depends. And remember, too, we were talking earlier about an exit strategy and converting into those income-producing assets. So the way that we are set up with a variety of wholesalers means that when it's time to liquidate, we're going to have the ability to look at a whole bunch of different areas. Because at the liquidation time, the goal is to maximize your bang for the buck. And that could be a number of different ways, but we have that all laid out. And so we will be looking at all those different avenues to see where the best place is. But also keep in mind that with jewelry, there's a much greater markup. I think at least 300% or more, and there certainly isn't on the coins or the bars. So, but that's who she sold it to, and I'll show you what that market is next week. And Miramar asks, hi Lynette, what do you think is happening to the silver market? It's a short squeeze. They sold so much silver. We haven't seen the end of it yet, but they sold a lot of silver that they did not have. That pushes the visible price down, or at least that was the goal this time. But demand for the physical has grown so much that those paper contracts are getting overwhelmed. And, you know, it was one thing if they sold short at, I don't know where they sold short, $25, $33. But then they had to turn around and re-buy it at over $50 now. They're supposed to have been able to buy it back at $20, right? And then the difference between what they sold it for $25, let's say, and what they bought it back for, say $20, that's their profit. So what's happening is a short squeeze. People have that physical gold. They're not coming back in the market. And do you kind of remember in 2020 where there was this huge push for physical silver that just didn't exist? And so the silver ETF SLV actually changed their prospectus that all it had to do was reflect the spot market because they could not get enough silver to form those underlying baskets. So, sometimes these things just take a while before they play out. And I would say that that's really what's happening. There's no doubt in my mind, actually, that that's actually what's happening in the silver market. And we're going to see that in the gold market as well. And heaven help the Bank of England, who sent over a whole bunch of gold that they didn't own to the U.S., and then that was pulled out of the system. I mean, that's what's happening. That's absolutely what's happening. And it was inevitable at some point. And so it will become more and more visible and could upend the entire market. I mean, remember, 2019 is when I saw for the Bank of International Settlements. That reports on the derivatives, but central banks weren't hugely in the derivative market then. And so what I saw with my own eyes, but unfortunately before I knew print screen, was that for every 1 ounce of gold, 62,000 ounces of digital gold were sold. 62,000 to 1, and that was 2019. And then, of course, they changed the way they account for everything, and so it looks different today, but it doesn't change the reality. And reality is now meeting fantasy, at least in the silver space, well, in the gold space as well. So that's what is happening. And D. Princess asks, if the dollar keeps depreciating, what's the point in holding on to it? You previously mentioned it still serves a purpose in the beginning stage. What exactly is that purpose? Recognition, right? People still recognize this. If I go into a store, although fewer and fewer even want the cash, but if I go into a store with this, they recognize these as dollars. I even got to use these when I was in Cambodia. If I go in right now with this or with this, they don't know what they are. So it is early recognition for the very first part of the panic, because this is still recognized as money. It's fiat money, but it's still recognized, even though it's already lost, 98% of its value, of its purchasing power value. People don't realize that. So the point of holding on to a certain level of it is to get over that initial push and crisis. Then that's when your silver comes into play, as well as your gold, your barterable part of it. But that's why. It's kind of like a loss leader. But remember, too, that the strategy that we execute is about making you whole. So that means that we're going to cover and you're going to recoup this as well. And D. Princess' next question is, do you think the government will eventually introduce a universal basic income? Yes, I do. Yes, I do. Because we are a consumer-driven economy, and if the new money, the stable coins, if that is based on purchases, which it is, then they're going to need consumers to consume. So yes, I can absolutely see a universal basic income where everybody gets a certain amount flat to spend. If so, when? Probably soon, considering the level of poverty that's growing on a global basis, but in the U.S., where, think about it, they stimulated during the last crunch, they stimulated anybody that was making less than, was it $250,000 a year? something like that, right? Now, a lot of people would think that that's a lot of money. And at one point, if you were making $250,000 in 1980, you were rich. Yeah. Today, it's paycheck to paycheck. So most Americans don't have gold or silver. It's a fact. So they need financial support to get by. But the universal basic income will only work for a minute. And there's your hyperinflation, right? There's your hyperinflation. So yes, I do think so. When? Soon. I mean, if the markets continue to plunge like this, then there's going to be more panic and you'll create this righteous doom loop that'll get worse and worse and worse. And going back to the Fed Now accounts, they could be dusted off and used to inject that universal basic income to the masses. And, you know, they'll go and they'll spend that money, buy those stable coins, support that debt, and there's your righteous doom loop. It won't protect anybody and it won't mean anything, because when they do that, that means that the currency's value is going down even faster, your hyperinflation. And Mark Perry asks, aloha, Lynette. Can you please talk a little bit about backwardation? Mahalo. I love Hawaii. So, and I'm thinking, Mark, that's where you are right now. My niece, I think she's there too. She lives in Maui. But backwardation is when the shorter term price is higher than the longer term price. You know what? Why don't I do a piece on backwardation? So I can actually, because it's a little complicated, and this way I'll do it with slides and you can see it. So hold on to that, Mark. Yes, I will do it. Iron Mom asks, how do you get this through to the people you care about? I got my mom to invest and buy 10 ounces of silver 3 months ago, but everyone else either wants to stay in the stock market or mess with crypto. Maybe not after this week, Iron Mom. And we are working on it, but honest to God, if they said, and I did this, my favorite chart, if they said that you could only work with one chart, it would be the purchasing power chart. So you take them onto the Federal Reserve's website, the FRED, right? So put that in the search bar. FRED, purchasing power of the consumer dollar. Now, most other central banks don't really have this. The US dollar has it probably because we're the world reserve currency, right? But you pull up that chart, and in you'll have the parameters bar that you'll see, you put their birth date in there. And so they can see for themselves the loss of purchasing power, which is the real trend in the market since the day they were born, no matter how old that they are. Obviously, it's going to be more dramatic the older they are. But then also in that same chart, look on the left-hand axis and look at the big fat zero that's on the bottom of the chart, and we're just not that far away from it. So if you can get them to understand that it doesn't matter how many zeros are on the end of a bill, there you go, show us the purchasing power chart. It matters what you can do with it, and this comes out of the Federal Reserve's mouth, not yours. Could you put my birthday in there so you can see what I mean when I say put your birthday in there? 10/15/1954. Or you can do it from January. That's close enough. It won't make that much of a difference. Okay? So is that 54? Yeah. So you can see now it kind of looks like it's sort of trailing off and not so big of a loss down toward the side. Now, can you just go up to the 1 year? Up above where you put my birthday in? There you go. Click that. Okay? So you can see that it's constantly losing value. and then go back to the other one. Just do max. Just do the max. There you go. And look on the left hand at the bottom where you see a 0. Can you make that bigger so people can see it? On the left hand axis, can you see? Yeah, there you go. You see that 0? So the Federal Reserve is actually telling you how much this stuff is worth. And you can see the relentless march to that number. Try that. And can we put that link to my favorite chart? I did that a long time ago. I could probably do it better today. I don't know. But share that video and have that conversation, because it really doesn't matter how many zeros there are on a bill. It matters what you can convert it into. And everybody should be aware of inflation. And that's the question. Do you think inflation is going away? And maybe after this week, with what's happening in the markets, they might feel a teeny bit different, or they might want to buy the dip because that's been the training. And Tiana Licks says, Mrs. Lynette, would you go over how the government cannot control as much if we have precious metals? Also, rather than purchasing a home now, stack gold and purchase the house later with the gold we sell back. So there's a couple things in here. Look, every time they print, the value of the metal goes up. It's not just precious metals. The value, the nominal price, the dollar price that we see goes up, right? But if you're holding this in your possession and they continually print this junk, the value of what you're holding goes up. And according to the Bank for International Settlements, gold is the only financial asset that runs no counterparty risk. They also say that gold held at home is not subject to geopolitical risk. Why? Because it's not in the system that they can control. What they can control is what you see, so the spot markets. And so Wall Street has worked with the government all these years to suppress the visible price of gold and silver so that you did not realize that the currency is failing. That's a gold back. You do not realize that the currency is failing. Because once you are clear on that, frankly, you make way different choices. So the government can't control the fundamental value because they're not going to stop taking on more and more debt and creating that inflation. You are in control when you hold it because you own it outright. No counterparty risk. And it protects you from inflation, and it protects you from government abuse. Because let's say we are in a full surveillance economy and somehow you say something that they don't like. And we saw this in Canada not that long ago with the truckers' strike that was perfectly legal, and they didn't like what the truckers were doing, and they pushed a button and the truckers had no access to any of their bank accounts or any insurance or anything else that they needed for day-to-day functioning. Plus, they did that to anybody that sent the truckers even $5. They cut them out of the bank accounts. So if you're inside of the system and they say no, and you have no other option because you buy all your food from the grocery store, you buy all your energy, everything, you are not independent or self-sufficient, then if the government says jump, you have to say how high, and you'll censor and you'll do all sorts of other things because you are completely dependent on that system. Now, if you have gold and silver, real sound money that's outside of the system, historically, 100% of the time, you could always convert this into the local currency. It's really important that we don't just maintain gold and silver, but we got to have access to cash, which is creating restrictions for governments, which is why they've been working on getting rid of cash in the system for a very long time. So it's not just the gold and the silver, because again, goes back to your first line of defense. I can walk into most stores with this and use this to purchase whatever it is that I need, and it's anonymous, right? Cash is anonymous, and there's only so far below 0.00 that they can go, so that's what creates the restrictions. In a digital system, they can make that robbery so small that you think there's no inflation when they're taking away your principal, and you won't even realize it. So that's the first part of it, is how the government cannot control as much if we have precious metals in our possession, because we can go to many different outlets, whether it's a jewelry store or a pawn shop or a smelter or any place, to convert gold and silver of any kind, right, into this, and we can continue to function. Rather than purchasing a home now, stack gold and purchase the house later with the gold we sell back. And that is absolutely a fabulous strategy, but not necessarily the only strategy, because part of what we need is a place to make our last stand, right? And if we buy property today, and I'm not telling anybody to go out and buy property, because quite honestly, it is targeted for reflation and is severely overvalued. However, you gotta have a roof over your head, right? Otherwise you're renting, and that creates some other issues. So if you do make the choice to buy a house now, then what you do is there's a certain amount of gold that you buy, so that when they do that overnight reset, you then liquidate whatever level of gold you need to bam, pay that mortgage off with dollars that have zero value, or euros or yen, depends on wherever you are in the world, but the same thing holds true. So in the US, where you can get a 30-year mortgage, we have a huge advantage. In Europe or Australia or other places where your mortgage interest, everything resets every 2 years, 5 years, maybe 10 years, it's a little more challenging. So again, I'm sorry, because I always hate to say, well, it depends, but it does kind of depend on what it is that you're trying to accomplish, what your circumstances are, and what you have to work with. So that's why I can never really give you a blanket answer. I'm not, quote unquote, investing in real estate right now, but if I needed a structure over my head where I could put in gardens and chickens and, like what I've done here, solar, even though here the solar doesn't work. At the bug out, it works great, but here, meh. That was the first thing I tried to do when I bought this property. That was just a big fat goose egg. However, things are what they are. What can I tell you? So talk to us. We'll help you really tweak the strategy to support whatever it is that you need to do. But there's never just one blanket answer. And Aplac says, Lynette, why do the major gold and silver online outfits accept Bitcoin for gold? Because Bitcoin is liquid enough, and I'm not even saying that we wouldn't do something like that in the future, but we would not be sitting and holding Bitcoin, I'll tell you that right now. If we did choose to do that, then we would be immediately converting it because it's too volatile. But it is a form of payment. So, and more people have adopted Bitcoin. So it kind of makes sense for them to do that. However you want to transact, that's what we need to generally be able to transact in. Now, whether or not they hold it beyond that transaction is another question that I certainly can't answer because I don't know how they're set up. But likely they don't hold it very long. And WG asks, what do you guys think about goldbacks? I can see where goldbacks fit inside of the initial, that first part of the strategy. I can see where things like Kinesis or Glint also fit in that first part of the strategy. So goldbacks, I think, are good for a certain percentage that you would have normally held in cash, because you still need to have some of this garbage. I'm sorry, I wish you didn't. I wouldn't if I didn't need it. But you do need it, because this is our tool of barter. I wouldn't do my whole portfolio in goldbacks, but I can see where they could fit into that initial push as the crisis erupts. And Josh Goodwin asks, hey, Lynette, what are your thoughts on investing in foreign markets as America declines? We're all in the same boat. That's my thought on that. And we need to get sound money in the global monetary system again. We can't just do it in one place. We are all in this together. That's why I travel, and I'm working so hard, and I don't really know how to do it, but I think I'm doing it to a degree, where we're building a global community to get sound money back in the system again. But market to market, they're all the same. And all of the currencies are dying, the fiat currencies.
I have a question for you.
Sure.
So you said that, like, back in the day, you, like, stumbled across, was it the foreign trader? Non-dollar
denominated bonds.
Is that in the same vein as this? Like, it has other foreign currencies? Like, what is that, and how did it open your eyes to the greater world economy?
A non-dollar denominated bond is a debt instrument that's issued in other currencies. And I don't really remember how I stumbled across it, but it caught my attention because it was a 5-year AAA rated piece of paper. It was a McDonald's bond. And at that time, so this would have been 87, at that time, well, frankly, not only had we gone through Black Monday, right? So people were more concerned, but bonds were considered safer, okay? And the treasuries at that time, I believe, or AAA, short-term AAA paper, I think they were paying something like 8 3/4, but this 5-year AAA piece of paper was paying 12 3/4. So that caught my attention because it was short-term, high rating, much higher coupon. So before I actually positioned anybody into it, I had to understand. I mean, whenever something looks too good to be true, you need to question it, not just accept it. And back in the 80s, you could call, I was at Shearson, you could call the head of any trading desk directly and have conversation with them. Can't do it anymore. But back in those days, you could absolutely do it. So I called the head of currency trading because these were issued in, I was particularly drawn to New Zealand bonds, did a little bit in Australian bonds and a little bit in Canadian. But most of the work then, and this happened to be a New Zealand McDonald's bond. I don't know, I'd make the same choice today, but okay, that was a long time ago. And so talking to the head of currency trading meant that since it would pay in New Zealand dollars, that would then be converted to US dollars, and then the clients would get paid out. So that means that I had to understand how currencies worked against each other. And remember, this was 1987. So we were already in a different system. We were in a free float system. That's when I started studying currencies. And as I was looking at it, I started to see these repeatable patterns in the currencies. And that's when I realized that, wow, currencies also have a life cycle. That was also shortly thereafter because, I mean, that was definitely one of the best trades I ever did. one of the best ones, because it was so safe, and yet they'd pay in New Zealand dollars, which were a lot weaker against the US dollar at that point. So by the time the currency translated into US dollars out of New Zealand dollars, we were making like 25% on 5-year AAA paper. I mean, that was just stupid. But that's when I started studying currencies and then saw the patterns and understood about the life cycles. And had I not come across that bond, I wouldn't know any of this. I wouldn't know any of this. That's why I say I'm very guided, because, just the right place, the right time, and that's how that all happened.
Providence.
Oh, 100%. 100%. And Josh Good, okay, so, all right. Josh Goodwin also asks, I have a lot of my money in a Roth IRA and don't want to take the tax hit from cashing out early. What would you recommend? Well, number one, in a Roth IRA, you've already paid your taxes, so there would not be an additional tax coming out of that money. However, if you've held it less than 5 years, there would be a penalty for early withdrawal. So if that's the circumstance that you're looking at, I can tell you for an absolute fact that once we hit a certain part in the trend cycle, I had a SEP IRA, so there was a taxable event with that. But I cashed that out at that time. I still have a retirement plan. It's just not real visible. And again, I'll go back to, if you don't hold it, you don't own it. So it isn't that you can't do physical gold and silver inside of your Roth IRA or any IRA. That's easy enough to do. It just kind of makes it visible. You can do that, however, and not take a distribution. And then when you're past the point of penalties, you can have the physical gold and silver delivered out. There would not be a taxable event unless, of course, they change the rules on the Roth, which they can do that too. So you have to do what you're comfortable with, but remember, the strategy is set up for full circle. So if you're going to pay a penalty here, we will account for that penalty so that you recoup it. So that's, I took possession and I paid my taxes because I didn't like it as visible as it was, and we had entered another phase of the trend cycle, and I was no longer comfortable with it that visible. And Just Great says, what do you expect silver to end 2026? Boy, anything could happen, because remember, it's broken above that $50 demarcation line, and we're in the middle of a short squeeze. I mean, it wouldn't surprise me to see it at 60 or 70, and depending upon this tariff war with the U.S. and what happens with the shutdown, it wouldn't even really shock me to see it at 100, to be honest with you. The more fear that comes into these markets, the higher the nominal price of both gold and silver are going to be. But technically, you have to understand that even if there's a pullback, because remember, if there's a gap, a closing at one price and an opening much higher, at some point, all gaps get filled. I'm talking about a price gap. So we can look and see where those gaps are, but that's just pure technicals. We're just in a really interesting place at this moment in time. Will things calm down? Well, then you could see a pullback. But it doesn't look like they're going to be calming down anytime soon. So we'll see where it ends. 60, 70, maybe 100. We'll find out. It still doesn't reflect its true fundamental value. Even at $100, it doesn't. You know, the true fundamental value of an ounce of silver is somewhere around, I think, $1,200. So it's at chump change now. But it did have, I mean, I've never seen any other asset. And if you'd like me to look, just go ahead and email that in or put it in this text thread, what you want me to look at long term, like we look at silver. And you're going to see, I mean, maybe I'm wrong. I haven't looked at every chart in the world. But I have never seen a double cup formation like the double cup that silver has formed. That's powerful. That is so powerful. It's crazy how powerful that is. Never seen it before. And Lynette, Bill 5457 asks, Lynette, have a question. Are they flying the silver over to London to avoid possible tariffs? And what do you think about futures silver lower than the spot price? Well, we're going to talk about the backwardation, and I will have that done for next week. So hold on to that. But I don't think they have the silver to send back to London. That's why it's a squeeze. That's what the short squeeze is about. So bear with me on the backwardation till next week, but I don't think that they're able to fly the silver back over to satisfy that squeeze. Not from what I'm looking at. It's getting real interesting now. Real interesting. You know, things always look good, all the leverage, all of that, all the debt, blah, blah, blah. Always looks good on the way back up, but it looks horrible on the way down. And we've just started. This is just the beginning of it. And Lori Power asks, question, collector coins, best to buy this year's or does it matter as long as 99.9? Well, those coins that are 99.9 are only collector's coins because the government says they are. But if you can hold it inside of an IRA, then it is just the kind of gold that is most easily confiscated. The collector coins that I am personally most comfortable with, thank you, Uncle Al, are the pre-1933 that have a long historical status as being rare and collectible. So I go with the pre-33s. To me, this is a collectible coin, not some that they just put out at a limited edition. But you have to remember, this was the money that was used, right? So to have one in mint state form, this was used. You see me, I hold it all the time. I'll throw it back and forth, you know, throw it on the desk. Doesn't really matter. I happen to be wearing my travel bracelet today. So these are all coins that are inside of this. I wear it. Maybe I accidentally knock my arm. Doesn't matter. They're going to have lots of blemishes. But a pre-33 coin that was never used in circulation is truly rare. And so you'll see MS, which means mint state, which means never used in circulation. Those to me are the true collectible coins, and that's where I personally choose to hold my wealth. That's where I have the most level of comfort, and saw my Uncle Al holding at least 3,000 ounces of gold when it was illegal to hold it any other way but the way that he did it, and also in jewelry. Jewelry was not confiscated, and that's because there's greater markups. So, yeah, I like the true collector coins, not the ones that the government says, oh, that's a collectible, and so they can just charge a big premium. Frankly, I found that when you go to sell those back, the wholesalers don't pay the premium that you paid on the way in. So, not what I choose. But everybody's got to do what they're comfortable with, regardless of what I or anybody has to say. And Deb Warner asks, Lynette, how will the feds educate the U.S. public and the world on the currency exchange, such as what the calculations between the dollar and digital currency when there will be so many digital coins. Isn't that a great question? And also one that remains to be answered. I think that they're going to keep the names the same. So in other words, there'll be a dollar coin because that's how they do it. So people don't realize that anything has changed. And to somebody's comment earlier, like China's coming out with a stable coin, Hong Kong's coming out with a stable coin. Those will be backed with their currencies. So it'll still be relative, I would imagine. It will still be relative one to the other and probably also based on a certain level of demand. But we're just going to have to see. It's about controlling the public. China knows how to do that probably better. Well, maybe North Korea knows how to do it a little bit better, but China sure knows how to do it very well. And D. Glass asks, if the U.S. Treasury revalues gold to, say, $3,500 an ounce, how does that affect a gold price, if at all? I think what you're talking about, so correct me if I'm wrong in this, but the official U.S. price of gold is $42.22, and that's where they hold it on their books. It wouldn't make sense to revalue it to say $3,500 because they don't benefit from that revaluation. Now, to revalue it to $40,000 or $60,000 or something like that means that they can wipe out a whole lot of debt because it absolutely would put the value of the money at zero, the fiat money at zero. And so they could use that to then pay off the debts. That's how they do that. Yeah, there's the official price of gold, $42.22. So I think that's, and how does that affect a gold? When they do that overnight revaluation, it affects it a lot because it now starts to move towards its true fundamental value. It won't do it on the first go round. They never do. It should have been revalued to 42 back when they revalued it to 35. It should have been revalued higher when they revalued it again at 38. And it should have been revalued much higher when they did the ultimate one at 42.22. But they weren't ready for us to really understand fully the devaluation of the currency. And so the choices that they made were based on public notice. By the time they do the full overnight revaluation, and remember, globally on average, that'll happen 3 times. I don't know how many times it's going to happen this time. Maybe it'll be once, maybe it'll be 3, maybe it'll be 6, like Zimbabwe and Venezuela. I don't know the answer to that, and nor do I know what the cover ratio is going to be. In other words, when I say 40,000, that's on a 1-to-1 basis. Are they likely to do it on a 1-to-1 basis? Probably not. They might do it at a 2-to-1 basis. And so when they do that first revaluation, let's say they do it tonight. I don't think that's going to happen. But let's say they do that tonight with the fundamental value of an ounce of gold at 40. That means that they would revalue it to 20. But then it'll continue to move up through more revaluations as they burn off this debt, meaning as they repay this debt with dollars that have no value. And they have to do that in order to go into the new system, since at least at this point, it seems like the new system is still going to be dependent upon the issuance of debt as well as purchases. So, yeah, that's how it impacts gold. Gold will start to move toward its fundamental, its true value. So if you're holding it, you're benefiting from it. And Brandon A. asked, have you experienced trouble traveling with bullion? No, I have not. No, I have not. You know, there's certainly a limit to how much I take with me. But like this last time, we had coin cards, so that means I had quite a bit of silver with me. And I had absolutely zero trouble traveling with it. I did in the small airport in Cambodia. I still had a few silver coins left, and so I did have to show it to them, but I had absolutely zero issue. I had zero issue with the gold that I had. I even brought, collectible coins as well as some bullion and some raw coins. Not one problem. Nobody even asked me about it. Not a word, not a word. It's been easy. And I've done quite a bit of traveling with gold. And I mean, this is my travel bracelet, right? So if I needed to, wherever I was, if I needed to cash in one of these gold coins or a link from this bracelet, which is white gold, I wouldn't hesitate. I wouldn't hesitate even for a minute. But no, it's very easy. And Rosie Tay asks, Lynette, is it crazy to go all in on gold and silver if you receive a big windfall? If you're not ready to buy land, how else can you diversify? Rosie Tay, that is the choice that I have made because I am so crystal clear as an ex-banker and an ex-stockbroker and understanding that we are transitioning into a new system. That is exactly what you should do. In addition to growing your local community so that you can create surety in food, water, energy, security, barterability, wealth preservation, community, and shelter. Because I've been working on this very hard since 2008. I mean, the gold and silver since 2002. But all those other pieces since 2008. And I'm more ready than probably anybody else that I know. But we don't have the luxury of time anymore. So those two pieces, and no, it would not be crazy because what you're doing is you're positioning into sound money that's in your possession. You're guaranteeing that you are holding your purchasing power intact and putting yourself in a position to take advantage of opportunities. Because those other assets, even with this correction, those other assets are at nosebleed valuations, right? I mean, they're talking about it all the time, how overvalued everything is. That's going to flip-flop. And if you hold your purchasing power, you're going to be able to buy those other income-producing assets when they are dirt cheap. So call us. I mean, that's the best thing to do is call and have the conversation. What are you trying to accomplish? What are your circumstances? What do you have to work with? And put together your sound money strategy. And it isn't just an all and done. This is a living document. This is a living strategy, and it will evolve as everything else evolves. But I'm all in because I've worked in those areas. I understand what's happening, and where do I feel safest? Physical gold and physical silver in my possession. That's where I feel safest. And Peter Dragons asks, how's gold and silver redeemed when cash fails? Well, remember, when one system dies, another one is born. So you will always, history tells us, you will always be able to convert gold and silver into whatever the local currency happens to be at any moment in time. And in fact, originally, the strategy would have converted a lot on the other side of this mess. And you'll know that when they're done, when there's a gold component in the currency, as long as it's redeemable. Otherwise, like we saw in Zimbabwe, it doesn't mean caca. But what you'll want to do, or what the original thought was, is that a chunk of the gold and silver would be positioned into that new currency. But that was before I saw the digital currencies. And so with having said that, then that change the strategy in that I will convert it as I need it. And it depends on the circumstance. So no, I won't convert a big chunk. I will convert a little bit, but you can just convert it into the local currency. That's how you use it. That's how you redeem it. When cash fails, if it's digital, you'll just convert it into the new digital currency. And you'll do it as needed, but that's also part of the strategy. How should that happen? If that's the way you're generating income or positioning for something else, etc. So it'll vary person to person, but that's how you do it. You just convert it as you need it. That's the beauty part of having such a broad base of buyers. That's why you're seeing this major correction, because it's only in one place. In the cryptocurrencies or Bitcoin, it's in one place. That's it. But with gold and silver, it's used in energy, it's used in manufacturing, it's used in the financial system, it's used in jewelry, it's used in food, it's used in art, it's used in solar, it's used in computers. And all of this new computing technology that they've got to do, there's demand. The broadest base of buyer. It's not rocket science, it's just reality. And Golden Path to Africa says, greetings to all from Turkey. Miss Lynette is absolutely right, because Bitcoin is shitcoin simply. I'm telling you, I hope to meet you, Golden Path to Africa, because I got to get to Turkey. I really do. I love Turkey. Keeps proving my point. Thank you so much. But I will be made. I put it out there. So hopefully I will be invited to Turkey or someplace close. If I'm someplace close, then I can make it to Turkey. But I really want to come and do an event there. So if you know anybody or you know events, send it in, email it in. You can just send it into questions at LynetteZang.com, and or send it actually to Natalie, right? So what's her email?
Let's have them just reach out to like the
Hello, okay. At LynetteZang.com, and then that'll get to Natalie, and hopefully I'll be coming to Turkey soon. Josh Goodwin asks, when we inevitably get the housing market crash, what would your strategy be to secure land for building an off-grid place to ride out the storm? That's kind of the point, Josh. You need to have a place to ride out this storm, right? At first, when 2008 happened, well, I was living in a little 2-bedroom condo getting ready to retire. Well, I could just lock the door and off I go. And then when 2008 happened, I said, there's a big change in plans. And so I bought this property, which happens to be in dead central Phoenix, because I knew that my daughters weren't going anywhere and they're my top priority. So I said, okay, well, I'll make my last stand here. And I became an urban farmer. Then when COVID hit in 2020 and there were riots at the Capitol building, which is near my house, and riots near my children at Fashion Square, of all places, I thought, oop, there's the hole in my strategy. And so I went and found out my bug out location, which is close, 2 hours from here. And that's my plan B. And there I have food, water, energy security. I have all of the mantra pieces in place. And the plan is to be able to support a community of 40, though Morgan says I can't support a community of 40. But I don't like the word can't. And so I'm not listening to her in that. And we're just keep putting in food and doing all of that. And we'll support as many people as we can, because it takes a village. Well, I got to be honest with you now, and this is one of the things that the Nomad Capitalist event, a live event, really helped me start to see more clearly. I think I might need a plan C, and that means a second passport. And I'm so surprised that I'm even saying this honestly, but a second passport and a third bug out location. So it's all in degrees, and that's what I'm exploring now, and I will share that with you. But we are global citizens anyway. And when you travel and you meet people at all different levels of, the economy and their local economy, et cetera, what you realize is we all want the same thing. We want a safe place to live and raise a family. We want our children to have the opportunities and to even have more opportunities than we have. And, we all want the same thing. That's why I'm working on a global community. But yeah, we all have to do what we're comfortable with, and I felt real comfortable with Plan B. And in fact, I got to go up there this past weekend, and it's been a while because I've been traveling so much. It is my happy place. It is where I can breathe. So even if I never needed to use it for Plan B, I'm still very happy that I have it because it's where I just breathe. It's where I just breathe. So, Josh, it takes a lot to put a bug out location together. It takes a lot of time, effort, money. It goes back to, call us and have the conversation. But it goes back to repaying that debt that you might take on today with dollars that have no value. You don't want to do more than you need to do, but and Ed Claire Trio asks, from a customer, please discuss the capital gains tax issues. Well, we've got, I think it's 11 or 14 states that have now made gold and silver as legal tender and removed the taxable event. But the federal government is still stubborn. So Citizens for Sound Money, we're working from the bottom up as well as the top down. And I have a lot of hope that at some point, if we can gain enough momentum on the states, just like what happened with the cannabis laws, when enough states had adopted it, then those laws changed. So right now, those federal tax laws are in place to keep you away from it. But as Ron Paul says, we shouldn't ought to tax money. Why are we doing that? Well, we're doing it for perception management. So let's work on getting gold legalized. And I think we have a place where we have the link for Citizens for Sound Money, so you can see what's happening in your state. And Daniel Diaz, actually, he's going to be here, I think, toward the end of this month, where we're going to, in real live time, he's going to teach me how to get involved locally here in Arizona with the Sound Money movement, so that we can make sure, not just on a state-by-state basis, that those taxes the capital gains tax go away, but also work on it on a federal level. Having said that, because we know that they're steep. Hey, they're steeper for gold than they are for stocks. Why? Because they want you to hold stocks, but they don't want you to hold gold. You see that? So whatever they are, with the gains that we're getting as gold moves toward its fundamental value, it's still better than paying 100% by not having that gold. But we are working on getting those capital gains tax removed. That's all about perception management. If we can do it with enough states participating, then we got a shot at the federal government as well. If we get somebody in the Fed after all of this that's burned off that knows about gold as sound money, because this movement is growing. The movement is growing. So right now it stinks, but I think in the future it's going to look a whole lot different. And Jimbo Khan asks, what companies are going to be buying all this gold and silver at the top? None. Just like silver places are already balking now. Well, that's not really true, Jimbo, and that's certainly not what the world has historically seen over 5,000 years. If you're walking into a small mom and pop shop, they're going to be more limited than if you're working with a company like Zang Enterprises that has that network built out and much deeper pockets. It isn't gold and silver going up, it's the value of the currency going down. And the bottom line is gold and silver, again, I'm being redundant because it's so critical that you guys understand this. They have the broadest base of buyers. So it isn't just jewelry stores or pawn shops or gold dealers or smelters. It's companies in energy and manufacturing and electronics and jewelry and art and food and space travel and on and medicine and on and on and on and on. Gold and silver contain the most utility that they have never been able to figure out how to duplicate in a laboratory. And boy, have they tried for thousands of years. So gold and silver has the broadest base of utility and the broadest base of buyer. Bitcoin, cryptocurrencies, dollars, euros, yen, one place. Gold and silver, every place. Do the math. It's really simple. Yeah, silver places are balking now. I'm not balking. But what's happened where there was first a rush to sell, there's been a pullback in selling. Now people are going, wait a minute, I think it might go up more. And so they're holding it. But that's not even why you should hold it, because the price in terms of fiat are going up? Hell no. Oops, sorry about that. You're going to have to bleep that out. Heck no. Yeah, we're alive. Oops. Heck no. No, nobody's balking. You know, it may be hard to believe, but you want an asset that has the broadest base of buyer. That's not rocket science. And Kali Fury asks, when selling metal to Zang in amounts greater than $10,000, does that sale get reported? It depends on what it is. If it's this, no, because legally we're not obligated to report any part of this transaction. Even actually gold eagles, so the new gold, is not required reportability. Now, there are certainly some foreign gold and silver that once you hit a threshold, then we are required to report that. But generally speaking, any of the assets that we actually use in the sound money strategy are non-reportable, not on the buy or the sell. And having said that, all good citizens should always pay all the taxes that are due. We are just not legally obligated to do so. And it's up to you how you want to handle it. But of course, I'm sure everybody that's watching would always comply with the legal letter of the law, just as Zang Enterprises will. And Kathy Katz, 27, is it too late to start today at 60? No, Kathy, it is not too late. The time will be too late is when we don't have the choice to buy it. So no, you get started as quickly as possible. Just call us. We're going to have a long conversation. You're going to establish your goals. We'll help you. If you don't even know what they are, we'll help you. We'll give you options. We'll discuss this. No, it is not too late. Thus, the importance of understanding fundamental value. Because once you truly know that the fundamental value of this is somewhere around 40 grand and this is somewhere 1,200, 2,000, and you see the spot market at 41, 45, 5,000, 10,000, 30,000, it's a bargain. And at $50, when its true value is at least 1,200 or 2,000, it's a bargain. So understanding the fundamental value of all assets tells you whether something is undervalued, fairly valued, or overvalued. Therefore, do I want to buy it? Do I want to hold it? Do I want to liquidate it? You still want to be buying, especially as the value of this is being destroyed in the deflation trade, for goodness sakes, or devaluation trade. When they openly discuss the devaluation trade, those talking heads on Bloomberg and CNBC and all of that, oh my God. Do you realize what they're saying? That's, go ahead, take the rest of the itty bitty bit of purchasing power out of the currencies. We'll do fine. Oh my God. That is an indication of how close we are to collapse, that the devaluation trade is touted as a good thing. It ain't a good thing for most people. It is not a good thing for most people. ATM asks, Lynette, do you think Trump will revalue gold to help with the national debt? The answer is yes, I do. His job is as a change agent. He cannot do that until we are ready to fully reset the currency. But yeah, that's exactly what has to happen so that we can start into the new system with a clean balance sheet. Because, while I questioned over these many years what was going to justify the creation of the money, they answered my question: debt and purchases. Well, that means that, yes, that is what the revaluation is about, is to repay that debt with dollars that have zero value. So a lot of it is based upon the level of debt. But here's the tricky part in that. It's all the derivatives that are written against the debt. Because again, nobody knows the VAR, the true value at risk. We will be discovering it, and so 40,000 is chump change. It's not even marginally close to what the true fundamental value of an ounce of gold is. But there's no way for anybody to really know what that number is. So that number is just based upon the level of global debt that's been admitted to and the amount of gold that exists, because gold is indestructible. So we can account for about 98% of all the gold that's ever existed. So yeah, it's not too late and it's not too expensive. And yes, I do think that he will revalue the gold to repay the debt with dollars that have zero value. And Josh Goodwin asks, can you further explain the difference between fundamental value and spot? Yes. Okay, spot is, they want you to think that that's the intrinsic value of an ounce of gold or an ounce of silver. But all that is an intangible contract. And there's a lot more silver and gold that can be created because there is an unlimited number of contracts that can be created. So, for example, when the Bank of International Settlements tells me that for every 1 ounce of physical gold that actually exists, there are 62,000 ounces of intangible gold, derivative gold. Well, that's gold that does not nor ever will exist. But if these contracts are sold on the market reads it as if it existed. And so that is the spot market. It is a contract of which they can create an unlimited amount of both gold and silver, and frankly, anything else, because that's all about leverage. Fundamental value is the value of the asset for why that asset was created to begin with. And there's a balance. So for example, with gold, with money, period, money was supposed to originally perform 4 functions. A tool of measure so we can price things. A tool of barter so that if I give you this, you'll give me that. A short-term store of value so that you are being fairly paid for your labor today. and a long-term store of value, so that whenever you use that money, you are always fairly paid for the labor that originally created it. So they developed this stuff to mimic this. And in fact, there was just a report that I used recently from, I don't remember whether it was the IMF or the Federal Reserve, I think maybe the Federal Reserve, where they put a dollar sign on a gold coin to represent the dollar, because they want you to think that this is the same as this, right? Which, of course, now we all know it's not. But that took away the long-term store of value. So then there were three, right? Because everybody knows that the longer you sit on dollars, the less value they have, the less they can buy you. Now, into the digital currencies, what they're talking about, particularly with negative rates, is if your paycheck has to be deposited into the bank account automatically, well, then it is immediately subject to negative rates, which eliminates that third piece of as a short-term value for fair payment of your labor, right? Gone. Because as soon as it hits that account, it's immediately going to be losing principal. I've already gotten all the purchasing power out. The next step is to take all your principal. So in the digital world, what they're talking about, and when I say they, I'm talking about the central banks and the governments, these guys, what they're talking about is simply as a tool of measure so they can price things, and a tool of barter so you can exchange. Nowhere in there is any level of a store of value. This garbage did not protect your purchasing power, but it did protect your principal. That's why they need to get rid of that, because it gives you, it's not the best level of protection. Gold and silver is the best level of protection, but at least cash gives you a level of principal protection. So they've actually been working on getting rid of cash really since the 50s when they came out with the credit cards. And it was in the 20s when they started pushing us into being a consumer-driven economy. And the normal person could get credit that wasn't backed. No, it was backed credit. But then in the 50s is when we got the credit cards, and that wasn't backed credit. So that's the difference. So fundamental value is the true value of an asset based upon what the original intent of the creation was. And while there were many with gold, the single most important function of gold is to hold your purchasing power intact over time. That's exactly what it does. And it does that because there's a finite amount of it. It is indestructible, so we can count on it. And it has the broadest base of function and functionality. So it has the broadest base of market. It is the only financial asset, according to the Bank for International Settlements, that runs zero counterparty risk. Everything else is counterparty risk. Everything else is counterparty risk, including this crap. It's all counterparty risk. Unless you are an engineer and a specific kind of engineer and you can go in and read all of that source, I don't know. You think they might be able to put something in there that isn't for your benefit? Just saying. Maybe I'm wrong. Maybe you can laugh your LMAO. Maybe you'll do that, but we'll see who has the last laugh, because it's all playing out just like it has over 4,800 times. This time is not different, and the new currency that they have in mind for us is not different. Let's make sure we've got some sound money component in there so that we can have say in our future, so that that playing field is level. And there are limitations, and it forces fiscal responsibility. What a concept. fiscal responsibility. Woohoo. And Terry Mack says, and by the way, Josh, I did a video, I don't know, maybe 3 or 4 months ago, something like that, on the difference between intrinsic value and fundamental value. So this will be my last question for today. Terry Mack says, we only have each other when SHTF. No politician is coming to our rescue. Community equals survival. I could not agree with you more. I could not agree with you more. And you know, you've seen my work shift quite a bit since I realized that community is really the key. Local community to ensure surety in those things that you need to lead a reasonable standard of living, and globally to get sound money back in the system again. Period. End of discussion. We got to do it. We've got to do it for the future. And you guys, this is, as always, great. I'm always sorry when it's over because we could keep going, but I do have another commitment that's coming up, so I got to go get ready for that. And until next week, and until next we meet, please be safe out there. Bye-bye.